Good morning, everyone. My name is Mike Troyan. I'm a former federal underwriter. I underwrote FHA loans and VA loans, spent 8 years of my life doing that, and now I'm in the mortgage lending arena. I would like to begin this morning with our morning devotion. I chose Romans 1:22. Professing to be wise, they became fools. Professing to be wise, they became fools. And so as we go about our personal lives and our professional lives, we need to be aware of those folks out there that try to be something that maybe they're not. And as a consequence, they become fools. What I would want to talk to you about today is we sometimes go through these economic cycles where people run the risk of losing their homes. They're victims of circumstance. We saw what happened with COVID in this country, with the Wuhan virus. A lot of people lost their jobs. A lot of people fell behind on their loans. But guess what? FHA has a loss mitigation program second to none. If you have an FHA loan, there are 3 options that the lender must come up with an offer for you to avoid a foreclosure. These are not optional, they are required. For example, if you've gotten behind, if you fell behind on your mortgage and you're now back to work, but you can't catch up 6 months payments, they can offer you a payment schedule. Maybe you are now making 1.25 payments at a time to allow you to get caught up to avoid going into a foreclosure. And so that would be a repayment option, that now that you're back to work, you just don't have the capital for 6 months delinquent payments. You can pay a payment and a third to get yourself caught up. If you are farther behind on the mortgage, for example, maybe you're 8 months behind, but you're now back to work and the cause of the default has been cured, a modification can be done of the mortgage loan. They can take the delinquent payments, add them on to the end of the loan, and recast them at the market interest rate, thereby avoiding, once again, a foreclosure. Did you know, on the third option, that you can be as many as 12 months behind on your mortgage, have recovered from whatever it was that threw you behind? The Secretary of HUD will enter into a promissory note whereby they will advance the 12 months to bring you current. You sign a promissory note agreeing to pay it back. Currently, those promissory notes contain 0% interest. Currently, those promissory notes do not have a monthly payment associated with them. They become a second lien on your home. When the house is refinanced or sold, then obviously that would be paid off. But guess what? So many people that were afforded this option wanted to make voluntary payments that HUD had to open up a payment processing center in Stamford, Connecticut to take voluntary payments. That is an example of the American spirit. That is an example of homeowners wanting to thank and repay what was given to them to work themselves out of a dilemma. And so when you have an FHA loan, you have loss mitigation provisions to allow you to avoid foreclosure. And just remember, folks, I am a mortgage banker. I'm a former federal underwriter. If you're thinking about buying a home, refinancing, or you've got a workmate, a neighbor, or a relative thinking about refinancing or buying a home, I'm the guy with over 20,000 hours of hands-on underwriting experience. My signature made the loan.